Here it is, your 2025 business financing blueprint. Look, if you are looking to start a business in 2025 or exponentially grow one you already have, you and I both know that you're gonna have way greater success if you have access to the capital you need to succeed. And in this training, I'm gonna map out the exact blueprint you need to get all of the money that you're gonna need to tap into to be able to create exponential growth in your business in 2025. We got a lot to cover, so let's dive in. The very first step of your blueprint is business credit, and we gotta start there for a lot of reasons. First of all, this is something anybody can get. If you just started your business today, you're able to get business credit. Look, a lot of loans, a lot of credit lines might look at your cash flow, or they might look at your credit, or they might look at your collateral. But business credit looks at none of those. Just because you have a business, you can start obtaining business credit. And really, business credit can be used to fund 90% of whatever you need in the business. Look, so many entrepreneurs make the mistake of trying to get all the money they need from one source. And so many entrepreneurs are trying to apply for credit they just don't simply qualify for. So let's start you at the place that anybody can get this kind of financing. And just by getting business credit, you're making your business more fundable. It's giving you a clearer path to being able to get loans or credit lines as well. Now, any entity type can build business credit. I don't care if you're a partnership, an LLC, or a corporation, you can get it. There's no time and business requirements. There's no cash flow requirements. They don't even look at bank statements or tax returns. There's no collateral requirements. It's unsecure as well. And it works perfect for startups and established businesses where the business owner doesn't want to provide a personal guarantee or a personal credit check. And business credit not only gives you high limit revolving credit cards that you're able to use to grow your business, but those credit cards report to the business credit reporting agencies. So just by using business credit, you're actually able to build more business credit, which helps unlock even more credit and financing opportunities for you. Now, there's all types of business credit you can get. You can start with starter vendors like Uline and Granger that'll give you credit lines even when you have no credit now. Then you move up to retail credit at places like Amazon and Sam's Club, Costco, Staples, Office Depot, Home Depot, Lowe's. Even Macy's and Nordstrom offer corporate credit cards. Look, almost every major retailer offers corporate credit without a personal guarantee. You're not personally liable for the debt and without a personal credit check. And when you build even a handful of accounts on your business credit reports using starter vendors, then you're able to actually come in and start qualifying for credit at all these retailers. Next, you start getting credit at fuel stations, repairs, maintenance, fuel. You're also able to then get auto financing for hundreds of thousands of dollars. You're even able to get universal credit like Visa cards, MasterCards, and American Express cards you can use anywhere. Look, my advice to you as part of this funding blueprint is to start with an Excel log and map out all the things that you think you're gonna need to buy for 2025. Then take that list and look at every one of those items you can actually buy from a retailer. So if I'm in an office and I need to get new computers and a new desk, I can get all of that from retailers. I can get that from Amazon. I can get it from IKEA. I can get it from Staples. I can get it from Office Depot, amongst so many other places. So in that case, I don't want to need a loan or a credit line to buy that stuff. What I want to do is actually use business credit to buy it. If I need new computers, well, then I want to get credit at Best Buy or Dell or HP or Apple. All of them offer corporate credit without the guarantee or credit check. So if you make a big list of everything you need to buy, you're gonna probably see that 90% of that list you can buy just using business credit. So just by building business credit and that one financing tool alone, probably will pay for about 90% of whatever it is that you need to buy for your business. But hey, let's be real, 90% is not 100%. The purpose of the blueprint is to get you all the money you need to grow, not just some of it. This is where loans and credit lines come into play. But before we get to financing, keep in mind, just by building your business credit, you're going to give yourself a well-built out business credit profile that's going to help you get more approvals, help you get better terms, lower interest rates, longer terms, and also help you get higher approval amounts. So this is the key to getting you optimal financing. And if you want the step-by-step to build business credit, you can grab it at creditsuite.com/EIN. Now, back to loans and credit lines. As we talked about, business credit should pay 90% of whatever it is you need to buy for your business, but you're still going to need to cover the other 10%. There are things like payroll that business credit is going to be really hard to help you actually get. So with things like this, you're going to probably want to tap into loans and credit lines and get all the revolving credit lines that you can actually get. So how do you do that? Well, we do this through what we call the 3 C's cash access formula. Here are the C's: cash flow, credit, or collateral. Here's how it works. If you walk into a bank, it's probably one of the worst places to go to be able to get financing for your business. And the reason is your bank wants everything to be perfect. They want you to have excellent personal and business credit quality. They want you to have tax returns, business and personal, for years that show growth and that show an increase of revenue. They want you to come in and have collateral for whatever you're borrowing, but you might not have that. As a matter of fact, in a lot of cases, you probably don't have that. Well, the 3 C's formula doesn't require all that. What we're doing is we're focusing on your strength. And by finding lenders that focus on a strength and ignore your weaknesses, now we're able to get you loans and credit lines. See, if I walk into my bank and I don't have collateral and I try to get an SBA loan, I can't get approved. But if I go get approved for cash flow financing or financing that's based on my credit, then I am able to get approved. So what we want to do with the 3 C's formula is you need to be honest and ask yourself, which of these three strengths do you have? Do you have consistent cash flow in your business of $5,000 a month or more? Do you have good personal credit? Or do you have some kind of collateral? It could be stocks, bonds, 401ks, IRAs. It could be equipment, inventory, even cryptocurrency. Now, once you know where your strength is, now you know the type of financing to pursue. So if you have $5,000 a month in revenue or more, then we're going to look at types of financing like merchant cash advances, or we're going to look at things like revenue lending. Now, a merchant cash advance will look at your credit card transactions and typically advance you like 1 month of whatever you do in revenue against those credit card transactions. Now, revenue lending looks at all the deposits in your bank account, and it's typically approving you for about 1 month of whatever the total revenue coming into your business is. And the good thing is that with this 3 C's formula, if cash flow is my strength, they don't really care about the other 2 factors. My credit could be below average. I could have no collateral and still get approved for cash flow financing. It's focusing on the strength, cash flow, ignoring the weaknesses, in this example, collateral and credit. So just by having one strength, I'm able to get approved. Now, maybe I don't have cash flow. Maybe I'm just starting a business, but I have good personal credit, or have a friend or family member or investor or somebody else that does. Well, then in that case, what I want to look at is credit line hybrid. Now, credit line hybrid is a way that you're able to get credit cards for your business that you can basically stack together that actually make like 50, 100, 150,000 in total approvals. This is the #1 funding option for startup businesses because you're able to get so much money as a brand new business. And it's no doc, there's no income verification, there's no collateral. All you need is good personal credit from you or a guarantor in order to get approved. Now, again, that 3rd C is collateral. And whatever you have or somebody else has around you, they're willing to pledge as collateral, you can, again, get approved based on that collateral alone, where credit doesn't matter and cash flow doesn't matter. A lot of these are perfect options for newer businesses, and the rates are really, really, really low. And a lot of this kind of money you're able to get for 5% interest or less, regardless of personal credit quality. What? That's kind of crazy. So you need to ask yourself, what is your strength? Do you have cash flow, or do you have credit, or do you have collateral? If the answer is Ty, I don't have any of those, it's okay. Remember, business credit pays for 90% of what you need to buy in your business. Start building a business credit profile. That is giving you a strength. So if you don't have a strength like the 3 C's, then build your own strength by building business credit. At the same time, you're getting the credit you need to buy all the things you need to buy to be able to grow the business, and you're building a credit profile and score that's going to make it easier to be able to get loans and credit lines at exactly the same time. Now, let's talk about some other strategies. If you don't have the 3 C's and outside of business credit, there's other kind of credit and financing you can get as well. Now we want to start thinking about, do you have a unique idea that can create explosive growth in a company? If so, well, then you really want to be looking at angel investing or venture capital, going to the private money market instead of looking at debt like credit lines, loans, and credit cards. Maybe you have a really unique, cool idea that would sell like hotcakes. Well, then you probably want to look at crowdfunding. Places like Kickstarter and Indiegogo, you can launch those kind of campaigns and raise hundreds of thousands, or in some cases, even millions of dollars of pre-orders to be able to get the money you need to fund your business and line up all of your initial customers at the same time. You also want to look at places like grants.gov to get yourself grants. Grants are 100% free money that you're able to get for your business, and you can get grants even if you can't get other kind of credit and financing. And if you're looking for even more ways to get money, then make sure you grab our guide on 27 killer ways to get financing. You can grab it at creditsuite.com/27. Now, here's an advanced strategy for you, because we can't wrap up a business financing blueprint without giving you the really good advanced stuff. You want to really be thinking about what is called funding stacking going into 2025. So funding stacking is where we're getting multiple different types of loans and credit from multiple different sources to stack our approvals and get even more money. Yeah, it's 100% legal. Yeah, 100% ethical. Here's how to do it. In order to do it, you really want to focus on getting 3 to 5 banks in these different sectors. First of all, big banks, national banks, Regions, Chase, Bank of America, you get the idea. Next category is regional banks. Like where I am, Bank of Tampa is a perfect example. These are banks that are local to the region that you're in. And number 3 is credit unions, like Navy Federal Credit Union, for example, works perfect for me as a veteran, right? So we want to look in getting 3 to 5 bank accounts set up at banks within these different categories. Put a little bit of money in there, 25 bucks, 50, 100 bucks. And then for a few months, make sure you show some activity, move some money around, make deposits, pull money out, show some activity in those accounts. Now, if you've done so and you have even average credit of about 650 or higher, you could typically go back after a few months of doing this and start applying for credit lines, loans, and even credit cards at those institutions. And guess what? If you're doing this all at one time, even on 1 or 2 days, well, then you're typically going to get approved with multiple different sources for multiple different types of credit financing and stack these approvals to get a considerable amount of money. I mean, considerable. Look, we have clients and I have friends that teach this to their clients. They get hundreds of thousands of dollars in financing every round they go to apply. Then they're going back 6 months later and doing it again and again and again. Then the financing they get, they're soliciting every 6 months for increases to the limits or loan amounts, and oftentimes getting those as well. So this one strategy alone of funding stacking can give you more access to capital than everything else combined. So this is an advanced strategy if you're willing to put in the work of locating the banks, setting up the accounts, moving some money around. If you're willing to put in that kind of commitment, then it can result in massive financial gains to you, even when you can't typically get other kind of credit and financing. So there you have it. There's your detailed blueprint of how to get financing in 2025. We talked about credit that anybody can get. We talked about the 3 different ways to get financing for your business. We also talked about alternative methods like private equity and crowdfunding that you can get even if you can't get those 3 main ways of business funding. And then we talked about an advanced strategy of how you can actually stack funding to get even more money. Don't forget, grab these 2 guides. Our step-by-step business credit building guide you can grab at creditsuite.com/EIN. Our guide on 27 ways to get financing for your business you can grab at creditsuite.com/27. And if you want to see how fundable your business is right now, then use our free fundability scan tool that actually integrates in with the reporting agencies and tells you the likelihood of getting the financing you need. You can grab that at fundabilityscan.com. Hey, did you get value from this training? If so, make sure you like and subscribe, and keep your eye out for our next training. We talk about more cool ways to get the money you need to start and grow your business.